This is Justin.
And this is Haley. You're listening to The Price of Avocado Toast.
We're a married millennial couple wanting to normalize the conversations around money. We want to hear about your highs and your lows,
The do's and the don'ts on your path towards financial freedom. Hi Toasties! Welcome to The Price of Avocado Toast, episode 11.
Whether you're a first-time listener or you've been following us from the start of this thing, we're so glad to have this conversation with you today. You guys, it's back to interview time. We got to sit down this past weekend and have an awesome interview on Sunday morning with a cup of coffee.
It was amazing. We interviewed Jamie James, who is one of the co-founders of Building a Financial Future, also BaFF, in Chicago. So we got to meet Jamie over Zoom and have a wonderful interview. BaFF is focused on equipping and empowering customers to make financially responsible decisions and inform customers of their rights and protections in the intimidating world of banking. Jamie has over 8 years of experience working with Dodd-Frank consumer protection laws and regulations. Of those 8 years, 6 were spent at the Federal Reserve Bank of Chicago as a bank regulator. She currently works as a regulatory compliance consultant to banks.
You guys, I'm going to put my hand up on this one. Our audio for the start of it is a little shaky because our Zoom wasn't totally connecting. But once the connectivity clears up, the interview is great. Jamie knows her stuff. She's so passionate. She's so sympathetic and empathetic to others around her that might be not as well-versed in this subject. So we hope you enjoy this interview. We had a blast sitting down with Jamie. We can't wait to sit down with her again and her other partner in BaFF to just continue to help you all set up a better financial future. So without further ado, here's Jamie. You guys, thanks for joining us today. We are sitting down with Jamie from Building a Financial Future. Jamie, how are you today?
I'm good, thanks. I'm super happy to be here. Thanks for having me.
Yeah, we're so glad to sit down with you. I know that when we started the Instagram, you were like one of the first follows, and I know that you and Haley have connected on there several times, and we're super interested in your guys' content and what you and Andy do. So why don't you just explain for our listeners who is or what is Building a Financial Future and what got you two started with your nonprofit or your movement?
Yeah, no, we're definitely happy to share, and we love the content you guys are putting out there. It's great to see all the financial literacy related people on Instagram connecting. So BaFF stands for Building a Financial Future. BaFF was founded by myself and Jamie James. I'm actually a former bank regulator from the Federal Reserve, and consultant, and Andy Smith, who is my business partner, who unfortunately couldn't join today, but we're hoping to include in some future collaborations. She is a CPA by trade and a former consultant as well. Andy and I, we kind of are two different branches of BaFF. So I kind of focus a bit more on laws and regulations, kind of what's happening in the government as far as consumer protection. And Andy is an expert on all things about like tax filing, retirement, just a plethora of different topics. So our goal at BaFF is to provide an unbiased source of information to answer questions from a consumer protection perspective. And what that means is, after the 2008 financial crisis, Dodd-Frank included all of these different consumer protection laws and regulations designed to really protect consumers. The world of banking can be very overwhelming. So what we aim to do is help the everyday consumer kind of understand their rights, responsibilities, and protections so that they can build a successful future going forward. Part of kind of what made us start this is that, Andy and I are very fortunate to where, we work in banking, we work in regulation, and we hear in the news a lot about different things that banks do to intentionally or unintentionally harm consumers. A bank that rhymes with Smarto might come to mind. And when we were thinking about what happened with that bank and the ghost accounts and how people were kind of getting charged for things that they don't remember signing up for, we were thinking about it from the consumer perspective. We were like, for us, it's very easy for us to be like, how did people get into this situation? But when we really kind of took a step back, we were like, wow, like the world of banking can be really intimidating to people. And so to the point where people don't actually even want to look into what their current finances are and what the situation is. So we thought, we're very blessed to where we have a lot of this information on hand. Why don't we take a step back and break down these concepts? Because when it's bankers versus consumers, it can almost be a little bit of a bullying process as well. So we thought, wouldn't it be great if we take our knowledge and kind of break things down, answer questions, and just help people be a little bit more protected in this world?
That's amazing. I really appreciate that because I feel like we got into such a financial disaster. I mean, not because of like banking, but a lot of it was because of just not knowing what to look for and what to do. And I just appreciate that you guys are trying to help people know what to look for. Because if they don't know what to look for, it's really easy to get screwed over
Oh
blindly
yeah.
and then look back and be like, holy crap, how did I get in that situation? I have no idea
Yeah.
that I was even signing up for that or I didn't know what to look for. So that's awesome.
Have either of you been like hiring trainers or anything within your companies? Because it feels like that's such like a heart of a teacher, somebody who like wants to help others, like I wonder if you guys have teachers in your family or if you have like little siblings that you were like parenting growing up or anything. Like where did
Oh,
that passion for helping others come from?
oh no, we appreciate that. I don't know. I think for me at least, I with like my background, like my family had immigrated over, and I think that like learning finance and like learning financial literacy, just like definitely didn't come easy to my family or others. And now that like I'm an adult and I'm working and I'm making my own financial decisions, I'm like if I like had this knowledge back then, I wonder how things would have played out differently. Like of course, like we made mistakes. I still make mistakes, and I think I think everyone has made financial mistakes. And I think I think especially with a lot of the actions that have come out of the Consumer Financial Protection Bureau and the Department of Justice, it's almost like you're seeing these repetitive mistakes. And for Andy and I, we were like, like it's not getting better. The situation isn't getting better. People are still getting harmed in the process. So, what do we do? Like it's time to just do something about it. And like we'll kind of get into this later when we talk about fair lending. It's got to a point where there's a lot of injustices that are happening in the world of lending and in the world of banking and finance. And I feel like for Andy and I at least, we were like, well, let's just start it. Like there's a lot of different places that touch on different things, and like you guys provide like the anecdotal examples, which I think is so helpful for your viewers and your listeners. Like I think everyone is embarrassed of the mistakes that they make, but everybody makes them, and it honestly helps to hear that other people are making it and how they fish themselves out of it too. Like I love the post that you guys do about like I think I was recently on your Instagram about one of the loans that you guys have paid off, and it's so good to see that. Like it's so good to see it from you guys and other accounts that like we're all friends with. That you're in a situation, but you find yourself out of it, and that's kind of where we came from. We were like, let's just see what we can do. Like we all make mistakes. We all have done something dumb in the world of finance. Like let's all just start to like normalize this conversation.
Yeah.
Yeah.
On the topic of normalizing, were you and Andy friends before this? Were you colleagues? Like, how did it come to fruition that you're both like, hey, this is a passion of ours. Let's figure out how we can team up and do this?
Yeah, we're actually colleagues. So we both Andy was at a company that I am currently working at, and we were just kind of talking about consumer protection. And honestly, I think we were talking about some of the different actions that were going on. And I think like we were saying like how does someone like not notice some of these things that are happening? Like there's a case that I'll kind of talk about later when we talk about fair lending, where a bank was straight up just discriminating against a certain race of customers. And we had said, why aren't people speaking up about this? Like, why are all these actions saying that this happened for 10 years? And we were talking about it more, and we're like, well, like, it is probably very intimidating for someone who doesn't work with banks to go to a bank and say, like, hey, I feel like you are discriminating against me. It's almost like there's just a lot of rules out there that you can't fight against when really you can. So Andy and I had a lot of conversations about that, and that's when we were like, you know what, we're lucky enough to where we have this knowledge. Let's just share it. Like, what's the worst that could happen?
Mhm.
Yeah, that's awesome because I feel like we've felt the same kind of with our own situation of if one person decides to hear this, then we've made somewhat of a difference. You know, like you
Yeah.
said, what's the worst thing that happens is, okay, somebody doesn't want to listen or consume the content or whatever. But
Mhm.
if you provide it for them, I don't want to use that cliche, like if you provide it, they will read or whatever, you know, but
Yeah.
it kind of is like that. If you're just upfront, you know, it might circulate. It might get to somebody who really needs to hear that message or know that, hey, actually, I do have some power in this and I don't need to kind of feel like I'm being targeted or bullied or whatever it may be.
Yeah. And I think we've heard a lot from people who said that they just feel very alone in this burden. And, for us and like what we appreciate about you guys and our other friends like on Instagram is that everyone goes through some variation of financial problems. And it's nice for people to know that they're not alone.
Yeah.
Yeah, we all go through it in
Yeah.
some way, shape, or form.
Mhm.
So today we really wanted to pick your brain about fair lending and fair lending laws from just when I think of fair lending, I think of banks providing loans to people fairly, non-discriminatory.
Mm-hmm.
Is there anything you think of like right off the bat?
No, and I think that's kind of why we wanted to sit down was like fair lending is such an abstract idea to me beyond like, oh, just the literal definition of the term. And I think it's something that would be really good for listeners to
Yeah.
be aware of and to pay mind to.
Yeah, because like you said earlier, when you don't know what to look for, it's so easy to get taken advantage of. So, what is fair lending?
Yeah, no, definitely a great question. So in 3 words or less, just kidding. So fair lending laws, like you said, Haley, like fair lending laws ensures that customers are treated fairly by banks and financial institutions. So the concept of fair lending is governed by two different laws. So one is the Equal Credit Opportunity Act. The other is the Fair Housing Act. Fair Housing Act might look a little familiar if you walk in. I actually can't remember the last time I walked into a bank now with COVID, but previously when you walked into a bank, you probably saw posters that said like FHA lender, and that's the Fair Housing Act. So they're two different acts. The Equal Credit Opportunity Act, or I'll refer to it as ECOA, makes it so that financial institutions who lend any kind of like banking products, loans, mortgages, etc., or actually, sorry, not mortgages, but like credit cards, auto loans, anything like that, they cannot discriminate against an applicant with respect to any aspect of the credit transaction. So application, the actual like origination, on the basis of race, color, national origin, sex, marital status, age, or any type of applicant income, meaning if it comes from a public assistance program. So any kind of like, let's say credit cards, products other than mortgages, or actually I think mortgages are linked in there. So I'll just say credit transactions. Um, you cannot discriminate based on those factors. So it's absolutely illegal. And then under the Fair Housing Act, it prohibits discrimination by providers of housing. So this would be like landlords, real estate companies, municipalities, banks, other lending institutions. You cannot make housing unavailable to a person because of their race, color, religion, sex, national origin, or familial status. Familial status meaning like if you have kids, like you can't say like, hey, you can't live here because you have children. And disability. That's kind of the last factor there. So, banks, so under the concept of fair lending, like banks can violate either intentionally or unintentionally fair lending laws in a couple of ways. Um, so, for example, like let's say your bank is marketing a credit card product, but they only send a flyer to certain areas in your neighborhood, and they are unintentionally leaving out, or intentionally or unintentionally leaving out an area. And that is a form of like violating fair lending because they are specifically not lending in a certain part. They're not advertising it. And that might be because of like a misconception that, it's a low income area. That area will not be able to afford this product, so we're not going to market it. Banks have to make it available to everybody. Another example is like steering. This is when an agent or an institution deliberately guides an applicant towards a certain product because they might just want to make more money off of it or something, as opposed to giving them the product that's actually fair for them. Um, Another term, and feel free to interrupt me if I'm like going too fast, but Another term is redlining. Redlining is one that's come up quite a bit because that's kind of a form of systemic oppression that has been going on for quite some time. So it's been in the news. It's been going on, unfortunately, for a long time, but now it's been coming up a bit more. Um, Redlining is another form of illegal discrimination where a bank provides unequal access to credit, so or unequal terms of the credit based on where an applicant lives. Um, it's something that affects certain neighborhoods in quite a bit of ways. So let's say that, so I'm going to use Chicago as an example. So Chicago is where I live. The north side of Chicago is very developed. There's like new condos. You're not seeing a lot of old buildings there. And it's because local governments and banks put a lot of money into those areas. They will like lend to people who typically live on the north side. While the south side is very underdeveloped. Hasn't been a lot of movement down there. As the north side gets, more developed and wealthier, the south side is kind of falling and becoming a little bit more older. It's not as updated. And that's a result of redlining. Banks typically don't want to lend in the south side because they have misconceptions about the borrowers there. They think that they won't pay the loans back. And we see that in a lot of cities. Like Chicago is a big redlining city. Memphis is a big redlining city. Um, Trying to think of other. There's quite a few out there. So we're starting to do a little bit of research at BaFF on that as well. We'll be highlighting more cities, but I know Memphis and Chicago and St. Louis actually have stuck out for that. Pricing is kind of another one too. It's where certain applicants get more or less beneficial terms than other similarly situated applicants. The way the regulators find that out is by comparing two same situated borrowers, but having a very different, like having something different between them. So you might find like male versus female, or like African American versus non Hispanic white, where like people have the same terms, but the same background, but different terms applied because of some type of basis there. Um, so it's interesting. There's a lot of different ways that banks can do it. It's hard for regulators to prove, but once there's some type of pattern or practice, it's there. And to be honest, a lot of the times that it's been founded is because of complaints from everyday consumers who felt like they weren't treated properly. So, I'm really glad we're having this conversation. We really want to make sure people understand that it's there and it is illegal. So just speak up if you feel like you've been discriminated against during some kind of transaction with a financial institution.
Yeah, I think that's so important, especially nowadays with the kind of movements that we're seeing with social justice and the ideas of like, okay, well, how do those not affected by these systemic oppressions support those who have been? And it's through giving them power to speak out against these injustices, even in something like this, where they may feel like they have no control over some huge financial institution. But if that institution is consistently making discriminatory practices or lending, then just feeling comfortable being able to call somebody or to speak out. So you kept saying like the regulators, who is auditing this stuff? Who's looking into that?
Yeah. So, the main regulators are, so we quote this regulator quite a bit, but the Consumer Financial Protection Bureau. I'll probably refer to them as the CFPB at some point, but they are like the consumer protection branch of the federal government, where you can submit complaints to them, and on their website they actually have a complaint log, so you can see public complaints filed from people towards like similar institutions that they feel like are doing something wrong, and you can file a complaint to them. You can file a complaint with the bank that you're working with. What I think people don't know is that banks are legally required to respond to a complaint from a consumer. And if you, yeah, yeah. So actually, I'm always telling people like, if you are having an issue with your bank, like whatever it is, ideally you both can resolve it, but they are legally required to respond to you, and the regulators check in on that too. They make sure that the bank has responded. And fair lending complaints are serious. So if someone has filed a fair lending complaint that turns out to be legitimate, like that is made public, and it's good. Like people should know that this is something they should keep aware of. Um, I know one example. So I know once the CFPB gets involved, the Department of Justice also gets involved to do their investigation. And I want to say it was a couple of years ago. There was a big fair lending case against a bank in Memphis, I believe, where they found that on mortgage loans, African American borrowers were matched up against similarly situated non-Hispanic white applicants. And they found that African American borrowers were being charged higher rates than non-white mortgage borrowers. And they were implementing an outright discriminatory loan denial policy. And it was terrible. And the only way that you find that is when the regulators go in and find a pattern or practice of this happening. Um, but I mean, I will say, if it makes the viewers feel better, banks will quite literally pay for this if they're found guilty of it. The bank was told to pay $4 million in direct loan subsidies for minority neighborhoods. I think they had to pay about like $800,000 for community programs. They had to do outreach, credit repair. I think they were applied a civil money penalty of I think about $2 or $3 million. Um, so like if you were founded for this, like you will go back and they will make you pay for what you've done.
Good,
Um,
as they should.
yeah.
Wow.
Did you, I don't know if you saw recently or if you did, Jamie, there was a family who had listed their home to sell. And when they were doing, the open house, it was a mixed race family. So the mom was black, husband was white, and they had black children. And their house got appraised for much less than regular
Oh,
comps in the area.
What?
So
oh,
they
awful.
took down all the pictures of the family, and on the day of the following appraisal from the same company, they had mom and kids leave to go shopping, and only white dad was in the house, and it got appraised for $150,000 higher or something like
Oh
that.
my
Oh
God.
my
Yeah,
God,
and so I
that
mean
is
that's just
awful.
it's just incredibly gross. And I
That's
mean this
just
is like a week ago it came out. It's
that's
just
insane.
yeah, it's absolutely insane. But that's again one of those practices. It's just
That's so terrible. Was that the mortgage company who got like I think they were accused of I think it was I think I read about that because I think it was the first non-bank that violated fair lending or something.
oh wow, I'm
That
not
was
sure
in the
exactly
news,
who it
but
was. I saw it
yeah.
on a Twitter note, and I saw the mom's kind of Facebook post explaining it all. But
It's
it's just
terrible.
terrible.
Wow.
Yeah,
You,
it's
you
just
know, you know where that was? Like what city?
I don't unfortunately. I know it was somewhere. I think it was somewhere in the Midwest. I should find out, and I'll have Haley shoot it over to you on Instagram because it was just
Oh, that'd be great.
wild.
That's so terrible. I didn't know those details behind it.
Yeah,
Wow. That's
That's why
that's crazy.
I'm glad you shared that story because that's why I think some questions we get a lot are like does discrimination really happen in banking? And we say like yes, like it absolutely does. I mean, it takes a while to prove because a pattern or practice has to be established. The regulators go in, kind of do their calculations and figure out what the monetary impact of it is. But it definitely happens, and unfortunately, that is the world we live in. And it's very important that we feel like we are, empowered enough to speak up and try to put an end to it.
yeah.
So if someone feels like they've been discriminated against in regards to getting approved for a mortgage or having their house appraised or really whatever it is, approval for a credit line, how like what's really the steps to go to figure that out? Because do they go directly to the bank or
You can, yeah, no, that's a good question. You can take a few different steps. I think you can definitely confront the bank, that you're working with. You're probably working with a specific lender. If you feel like something strange is going on, you have every right to request a different lender. You have every right to file a complaint with the bank, not directly with the lender you're working with if you don't feel safe about it, but you can file a complaint directly. That bank will have to respond to the complaint. And if you're not satisfied with the complaint, it will go on to like the Federal Reserve or the Consumer Financial Protection Bureau. They have a complaints area that will work to kind of mediate between the bank and the consumer. If you don't feel safe going to your bank, and I would definitely recommend the Consumer Financial Protection Bureau. Like Andy and I joke about this a lot because we tend to drop their name quite a bit because we're big fans of their resources. Their site has like a lending checklist where you can go in and make sure that you have everything you need. They break down fair lending and they say like, I know this is the TSA motto, but we use it a lot, quite a bit. It's if you see something, say something. So we hopefully TSA doesn't get mad at us, but we use it in banking quite a bit as well. I think if you're interacting and you just feel like something is off about it, you don't want to talk to the bank, you can file a complaint with the Consumer Financial Protection Bureau on their site. You can ask them who their regulator is. the bank, and you can file it with the Federal Reserve, the FDIC, the OCC, Office of, sorry, I keep using letters, CFPB, Consumer Financial Protection Bureau, FDIC, Federal Deposit Insurance Corporation, OCC, Office of the Comptroller of Currency, Federal Reserve. You can file it directly with their regulator as well. Most of them have a complaint hotline, or you can send an email, whatever you're more comfortable with. Um, Specifically, one thing I do want to call out is specifically for fair housing related complaints. So if you, let's say like you guys decided to go and like you want to move to a new place, and if you've noticed that like the person you're talking to knows that you guys have a daughter, and then is like, actually no, this is not available to you anymore. That's pretty weird. That's not allowed under FHA. So you could file a complaint to the Department of Housing and Urban Development, which they have a site as well. And there's also local fair housing offices in each state where you can file a complaint as well. So there's a lot of different places that are available, and I want to make sure that you viewers know that as well. There's several different places, whatever you're most comfortable with doing, where you can file a complaint because this is illegal. It shouldn't happen, and we need to speak up more about it.
That's so awesome that there's so many different resources.
Yeah, I mean, I've heard all of these things before. You're saying the names. I've heard of the Consumer Financial Protection Bureau. I've heard of the Federal Housing FHA Association. I've heard of all of these things, but now it's like, oh wow, that makes so much sense. This is where you go. This is what they do. So wow, I'm like mind blown.
And I think for me, just somebody coming from low income, like I only associated HUD as like getting into housing for, you know, lower income, not associating it as also protecting people from discriminatory practices. It's so cool that there's so many resources out there for people to
it's
use.
great. And like, and it's complicated too, like, and it's hard because there's so many, you know, to choose from, and it can get very overwhelming. But as long as people know, you know, there is a place for them to go to. And the other thing I just wanted to highlight, this was kind of a stat I had pulled before hopping on, but you know, people really have a lot of power in them to make the mountains move. This isn't related to fair lending, but the CFPB conducted a study in 2017 that showed that complaints filed by consumers sparked enforcement actions that brought more than $750 million in relief for student borrowers specifically. Because there was a lot of action for, I think, maybe a couple of years ago towards student loan companies because they weren't being fair to consumers. All those complaints like generated at least $750 million in relief, which is
wow.
incredible. Yeah. People have a lot more power than they know when it comes to the financial world. It's just a hard world to learn. So
for sure.
I'm grateful for people like you guys that are sharing your story and everyone else we know on there.
Well, thanks. We're grateful for people like you who are you know, looking out for others, especially in the, you know, the realm that you are. Like I think it could be easy to, I don't want to say take the side of big bank, but for lack of a better term, you know what I mean? It could be really easy to say, well, this is, you know, the career path I'm on and this is, you know, what I do. But I think it's cool that you're sharing, you know, the practices for people to protect themselves. Yeah.
And I get it too. Like when I go to the doctor, like I know nothing about medicine or science in general. So I just, whatever my doctor says, I'm like, good. Okay. I don't question it.
Yeah.
I probably should. But so I get it when people are not in this world. You just don't really question it. You kind of just defer to what's said. But
that's so true.
Especially in a power position like money and finance.
Yeah.
Like it can be really, you kind of just go with it. Is there, Jamie, is there any type of downfall that might come on a consumer if they were to file an unjustified claim against a bank? I mean, is there any worry there, or is it kind of like, hey, we've looked into this and we don't find the patterns and practices are discriminatory, and so we've, you know, decided that we're not going to move forward with this process? Or is there some type of issue that a consumer could end up with?
you know, there are protections against consumers in I can't tell you which regulation. I want to say it's probably in the fair lending laws where it says that, you know, a bank cannot take some type of adverse action against a consumer just because they've previously filed a complaint. From there, you know, I know that the regulators do a review of complaint resolution, and they review like exactly what happens. And a lot of the times consumers tend to just go to a different bank. if a pattern or practice was not identified, if it was just kind of a one-off. But the regulators do make sure that banks do everything they can to to like keep the customer and like keep very clear mediation. There have been cases where, the bank and the customer don't see eye to eye at all, and that's when the regulator comes in and is that mediator. There's kind of a complaints department at every regulator where they will like, have the consumer on, they'll have the bank on, and they'll just kind of work towards a resolution. So sadly, sometimes I think like in life, sometimes you don't find a resolution between yourself and whoever you're kind of up against. So at that point, the person leaves the bank, and we'll probably find a new one. But the good thing is that if you're ever nervous about going to a bank and that the complaint isn't found, and then it's going to be a weird situation, you can always decide to leave and take your business elsewhere, and the bank cannot force you to stay, depending on like where you are in the situation.
Mm-hmm.
That's good that that's an option. You're not married to a specific bank. You can leave.
Yeah.
So if I file a complaint against Wells Fargo, that's a big bank everyone knows, so I'll just use that as an example. And then I end up switching banks to, say, Bank of America. Does that complaint follow you, or is it just kind of gone and it goes off with Wells Fargo after it's been settled?
That's going to stay with Wells Fargo in that situation. You don't have to worry about a complaint following you for the rest of your life. That definitely doesn't happen. And even the complaints that are on the Consumer Financial Protection Bureau site is anonymous. So your name at least would not be included. Probably the nature of the complaint would be on there. But those complaints are held anonymous. Like the bank cannot share that with other places. So it won't be on your credit report or anything. So no need to worry about that.
That's good though. That means that people won't be blackballed or anything like that.
Yeah.
And that I think that is something that people could be afraid of,
Yeah.
with, again, not understanding the power dynamics of big financial institutions.
Mm-hmm.
Definitely.
Yep. And unless you decide to like sue the bank yourself, then
Yeah.
like I think those cases are sometimes made public.
Right.
But yeah, so no need to worry about that.
In that case, I think they'd probably be a bit more comfortable with their name being shared if
Yeah.
they're going to be taking on
Yeah.
a large financial institution.
Big lawsuit.
Yeah. Good
Yep.
luck. JB, what should millennials pay attention to as they start to kind of navigate the financial landscape, specifically in looking into lending or things like that? We kind of preach on our podcast and on our realm that we're pretty bad with credit cards, so we don't suggest credit cards to others because we're trying to get out of debt. But for those who look into home loans or other types of lending, what should they be looking out for? What are some clues or things that they should keep in mind?
Yeah, no, great question. I think especially now during this weird time, like during COVID, during just very, very different right now. I would say that definitely pay attention to what's happening in the economy. This is a very strange time, and I would say that if you're a millennial and you're looking to, let's say, purchase a home, look at where Fed interest rates are right now. So rates are very low, and I don't see a time where this happens again, where rates are this low. So if this is the time that you're thinking about, and you're in a comfortable situation and you're financially stable, where you're thinking about a loan or getting a mortgage and buying a home, just pay attention to what's going on in the news, because our market is very volatile right now. And if you're in a situation where you can take that risk, then go for it. Like I would say, just monitor what's going on, stay up to date on the news as well. I was chatting with a friend recently who thought they missed the deadline on PPP from the Small Business Administration, and we looked it up, and it actually got extended, so they were able to get support for their small business. So I would say now, especially millennials, just really listen to the news, do your research, and look up concepts that are complicated. I mean, BaFF is here to help. You guys are here to help. Like, there's a lot of cool content and a lot of cool resources out there to help explain the situation of what's going on. And I think what's cool is that, like 15 years ago, I don't think there were YouTube programs of people explaining these concepts, and now there are. I think you literally can learn anything from anywhere. So I would say, try to do as you can and like get involved in those resources, really understand your finances. The other thing I would say too is, although I said there's a lot of resources out there, be sure to discern like fake news from what's actually happening. Use credible news sources. I saw an article recently that said everyone was getting like $5,000 in the next stimulus check that was coming out next week, and I was like, oh, that's news to everyone, and definitely not true. And I would say make sure you're following credible news sources. If you're really interested in the Federal Reserve rates that are being set and looking at purchasing a home, looking into lending, you can actually pull minutes from the recent Fed meetings off of their website. So you can actually see from the source what the Federal Open Markets Committee voted on as far as rates. So, for me, like I go to the Consumer Financial Protection Bureau for a lot of my news there because it's coming straight from the source. So I would say for millennials, be careful of that. Also to be careful, like we do live in a world of a lot of automation online. So if you are having like if you have your bank account online, if you're making automated payments, right now, like I think everyone has probably had an account they've been paying for that they didn't know they were paying for and that they don't use the resource for. I definitely have gotten in trouble for that. So make sure you're checking on your finances. Make sure that you know exactly what's coming out of your account right now. Because now the good thing is with everything online, you can have a very clear picture of that. But I think some people are a little afraid to look. But I promise that problem will not go away. So it's better to just look and make sure you know what your situation is.
Yeah, seriously. So, I think what I heard was don't share memes on Facebook that aren't even close to true, and
Yep.
be aware of what you're actually spending.
Yeah. Like
Awesome.
your newspaper subscription that we paid for like a year before we figured out what it was. It was
Oh,
like
yeah.
$13. So, $13 here and there. Oh, whatever.
Oh, adds up. Yeah.
But it adds up. And then eventually we're like, what the heck is this? We have to figure out what this $13 subscription is on this card that we don't even use. It was for online newspaper articles.
Oh, I know. They get you there, and for me, like I'm definitely an offender of like, oh, I will sign up for this for free for the first month, and then I'll remember to cancel it, and then I don't, and then I get charged for it later. And
Yep.
then Mint, I use like the Mint app for money managing, and Mint is sending me an email saying like check your accounts, and I'm ignoring them, and now I'm like, oh, that's what Mint was trying to tell me.
Mint was actually trying to have my back. Shout out to Mint.
Trying to help you out there.
Yeah.
Yep. Do you guys use like a money management app as well?
We use the
That's a budget app. Mint's a little different.
Oh, it is?
Yeah.
I don't know. We use the Every Dollar Plus app through the Dave
Okay.
Ramsey.
I've heard of that, yeah.
But it's a budgeting app. What's a money management app? Isn't that the same thing?
Mint is kind of it's a budget app as well, where it just like tracks your spending. They also send you suggestions of things you can invest in if you want. So that might be where it's a little bit different.
Yeah, that's what I've heard is that it gives you kind of some. It's almost like it's like a modern Credit Karma, but not really.
Oh.
That's what I've heard from somebody that works at Rosso. So I don't totally know. We'll have to explore Mint a little bit more.
Yeah, we totally should.
Yeah. By the way, I know you mentioned Dave Ramsey. So I went to high school in Tennessee, where Dave Ramsey is from. So my first econ course was us just watching Dave Ramsey videos over and over again. So when I saw him on Instagram, I was like, I know this guy.
Yeah, he's not for everybody. I mean, like I said, we had some behavior habits that we needed to change, and there's other people that we've interacted with on Instagram that are doing their own thing, and we're happy and supportive of them. But I can imagine that an econ course of just Dave might be a little much.
It's different. When I went to college, I was like, there's more here.
Yeah.
Got it.
Definitely.
So I feel like a lot of this, people might be thinking, okay, this is all like negative, discriminatory things. So what can you say about positive changes that have happened with the lending industry in general?
Yeah, no, that's a great point. Banks are getting more innovative, that's for sure. And I think that accessibility has been a huge piece right now to where the banking world is more accessible and there is a lot more outreach going on than there has been before. A couple of really cool things, there's a couple of banks that have come up with programs sent directly to teach people about savings, which is really great. So one example I was reading about was I think Michigan, there is this concept called a prize-linked savings account, where it's such an interesting concept. There, it's in an area of, I want to say it's Michigan or Indiana, but it's where people typically don't have a lot of savings accounts there. Like there's just a lot of like immediate spending going on. So one of the banks, I think a couple of the banks out there decided, we need to incentivize people to learn how to open savings accounts and save for, a better financial future. So what they did was they decided that, it's completely voluntary. But let's say like you open a savings account, you are accruing interest on there. So they said, if you put all of your savings in here, we will pool everyone's interest together and it'll be kind of a lottery system where one savings account person will get all of that interest. So it's kind of like you're incentivized to save more so that you can get this interest. Like, so you can kind of play on the lottery system
Huh.
and people's like incentive to be competitive a little bit and
Yeah.
get this pooled interest. And it's so interesting because I think at first glance I was like, I don't know about this, but it actually got people to save substantially over time in communities that never had that practice before.
Wow.
Wow.
That's
That
Yeah,
is
it's pretty
crazy.
really
cool.
cool.
Yeah, it's really interesting and like I another thing that had come up was the concept of youth savings accounts. This is fairly new in the last 10 years, but it's getting kids to open up savings accounts so they understand the concept of saving. And you would do that with like the assistance of your parent. I mean, kids can't just open an account on their own. But a lot of these banks have these youth savings accounts where they're like sending like, like little things like little financial literacy guides with like kids, teaching them why saving is important, like breaking down concepts in a way that they understand. um, that's been a really cool thing to see because I mean, I'll say for me, like I don't know that I understood the concept of saving for quite some time. Maybe until like high school when I started, some of Dave Ramsey's courses were about like saving, and I he's gonna come follow up with us and be like, "You guys learn anything?" But yeah, there's a couple of like I think it's really cool because this next generation is now learning like the value of a dollar and how like if they want to get something or they want to buy something, they have to put that work into saving. So I think it's really cool that banks are working with kids
That is
to like
super
increase
cool.
their education
Yeah.
on that. Um, I think other positive things is, we've mentioned this before, but a lot of the regulator sites have guides to help you through the banking process. So the CFPB site has a student loan calculator. I believe on the FDIC or the Fed website, it might be at CFPB actually. There's one where they say like enter your loan terms here to see how much you will be paying over time. So it's actually like a cost calculator. You like can get a clear breakdown of what exactly you're signing up for.
Yeah.
Um, I think something that's cool though too is that so a lot of banks, so all banks get like a Community Reinvestment Act rating, and that looks at how banks are investing in their surrounding community that they lend to. So not only like are they lending in this area, but what are they doing for the community? So we see a lot of banks team up with junior achievement and teach financial literacy courses. There's a bank I remember in Chicago that works in an area an area of Chicago where there's a large refugee population, and they work with that population to open up accounts, learn what kind of products they need, just teach them pure basics that I think anyone just coming here for the first time would have problems, like would have just trouble understanding. So I think it's great. I mean, I think honestly, banks are actively working to fight against, any kind of like, I mean, no bank wants to violate fair lending. So they are actively doing what they can to make sure that they are lending fairly and that they know which areas that that require the most help and need the most impact right now.
That's awesome.
Mm-hmm.
Seems like there's a lot of work for awareness and teaching, the community and stuff. That's awesome. That's so important. So important. And it's better than saying like what are all the negative things that are going on? It's like, well, the positives are that people are disseminating this information and trying to get it out there so that people are more aware and holding banks accountable so that banks are more aware of it and banks are trying their best.
Mm-hmm.
Like that's all you can ask for at the end of the day. So that's great that that's getting
And
out there.
they've been doing certain things a certain way for so long that just because some new laws are implemented, it's not going to change overnight. So that I really appreciate that, you know, the laws are being implemented and people are trying, but we also have to hold people accountable to make sure that they're actually following what they're supposed to be doing.
Yeah. That prize linked savings account, did I write that down right?
Yeah, you did.
We should do that here. Like, you put some into our savings, I'll put some into our savings, and then whatever interests we get, we just share.
You're ridiculous.
I just came up with a new concept. Marital savings. Look at this.
I like it. You gotta start somewhere.
Yeah, exactly. There you go.
Yeah. And when your daughter's older, she pulls her interest too.
Yeah.
And it goes to both of you.
Exactly. And she doesn't get any, and we go out for dinner. Yeah. Sorry, you get to
I
stay
think
home.
that sounds great. I think
That's
you guys
one
are
way to
onto
do
something.
it.
I like this. Look at this. We got to sit down more with somebody in the banking industry. This is great. So, Jamie, one question that we like to ask in all of our interviews is, if you could put a stop sign on the financial track for a millennial before they were going to make a move, whatever that move is in your realm, where would you put that stop sign? Where would you be like, absolutely, don't do this, please, for the sake of building your better financial future? What would you stop them from doing?
Oh my God, that is an excellent question. I think for me, this is very basic, but I have seen so many people tell me they're afraid to open their credit report. And
Oh,
this has happened a lot. I've been surprised by how much this has happened. And if you are afraid to open your credit report, I am asking you to work through that fear and open your credit report.
Yeah, seriously.
Please, for the love of God, open your credit report. So the reason is because, as I mentioned before, when it comes to finance, you cannot ignore the problem. It will not go away. Like, it absolutely will not. And I think Andy and I have both been in agreement on this, that like, when you are tackling your finances, the best place to start is opening your credit report, because that, unfortunately, your credit score does determine quite a bit of what you're able to do. And unfortunately, credit reports are wrong sometimes. Like, I've had a medical collection on my credit report that wasn't mine. I think I had like a similar name to somebody, and I had to do the work to get that off of my report because it was adversely affecting me. And when you don't open your credit report and you don't see what's going on, and I know a lot of people are afraid of getting hard inquiries and that affecting your report. I'll tell you, opening your credit report once is not going to give you any kind of like, if you open it like frequently, like 12 times a week, that might have a problem. But if you open it once, it's not going to adversely affect your credit. But you need to make sure that everything on there is yours. And also, we've talked about how we're accidentally on accounts that we didn't know we were paying for. It'll tell you on there too that like you are subscribed to this, and like, or you have this credit card that's open that maybe you didn't know about, but you have this outstanding balance, and it's there. And we actually offer a service at BaFF where, if you're comfortable with this, like, we will go through your credit report with you. Like, well, you'll have it on screen. Like, we'll all look at it together, and we'll say, like, this is where like all of your debt is pooled. Like, here are some strategies for how to just kind of tackle the adverse things on your credit report one by one. It's overwhelming, but you really should know what's there. And like, a lot of people that we've talked to have had credit lines with like those random store credits, like the Macy's card or like the Kohl's card, and they have
that's us. Both of us.
No, it happens, and I think people forget about it sometimes. So when it shows up on the credit report, they're like, I forgot I had that card. And we'll say, there's still a balance due on here, and that's adversely impacting you because you're getting late fees. So just pay it off and close that card and don't ever use it again, and then get it off of your credit report. So unfortunately, like we see a lot of people who just don't want to open it. But I promise you, like, you will be better off if you do open it and just tackle it one by one. And like, to not get overwhelmed by it, like, you can only do so much at a time. And I think like you guys have talked about this as well. Like, you just have to have a strategy for paying off of your debt. And you can't do it all at once. I mean, if you can, that's great. But you really, like, a lot of people can't. So just have just feasible goals, pragmatic strategy, and it'll take you there. And the only other stop sign I would say too is like, especially if you're young and you're starting to make money in a consistent way, don't get quickly into things you cannot afford. This is what led to the financial crisis. People were getting into mortgage products that they could not afford. Like, let's say if I make 20,000 a year, why am I being given a mortgage for $500,000? Like, this is not. And unfortunately, that's what led to the crisis. Is people were told by banks, like, it'll be okay, like, you can get into this huge home and it'll be fine. But really think about, is it going to be fine? And just kind of make more solid, make more realistic goals for yourself. And you'll get there one day, but you have to put in the hard work. It's kind of like the youth savings accounts. You got to teach people that you need to save in order to make these sound investments.
Mm-hmm.
That's great advice.
Yeah.
I wish I had that advice 5 years ago.
Yeah, seriously.
I did a credit debt consolidation in 2016 when we first started dating, and it took my credit score from, like, I don't know. It wasn't that high. It was like I was young. I think it was like a low 600, but it dropped it to like low 300s, and it's made its way back up. Like, the credit debt consolidation still shows up. Like, we just did a refinance, and they were like, hey, what happened in 2016? So I have to explain it, but you're able to fix it. And yeah, if you don't open up your Credit Karma is free. If you don't open it up and see what's going on, then you're never going to know.
Mm-hmm.
Oh, yeah.
But I think
definitely.
Credit Karma is like a soft inquiry. You can actually get a hold of Equifax or...
You can do that for once a year, right?
TransUnion, is that the other?
Yeah, TransUnion, Equifax, and there's a third one. It's like the big three.
Mm-hmm. And you can actually pull like a hard inquiry on your credit and start to look what is actually under my name, especially important for people like you and I, who have changed our names. I was Justin Brown. I mean, what a common name. Mm-hmm. You never know what ends up on there. So luckily we've had our credit pulled and we know that we're good. But yeah, I can imagine there's a lot of people afraid to open their credit report.
And Credit Karma is actually great because they send me like emails that give me a heart attack that say your credit score has changed when it's like 1 point. And I'm like, thanks, Credit Karma. Yeah. I almost died, but it's good to know. Yeah. It's good to know Seriously. That I went up a point.
Yeah, and they're always at like 7 a.m. when like you haven't had coffee yet, and you're just like, I just woke up, and I'm like, somebody's stolen my social, and I'm just. Yeah.
I know. It's like the first thing you want to see in the morning.
Yeah. Oh
Credit
my
Karma
gosh.
alerting you to something.
Yeah.
But it's good. Yeah. Like, I mean, overall, it's someone should be monitoring it. So I'm glad to get those emails.
For sure. Definitely.
So, Jamie, how can our listeners find you and Andy and Building a Financial Future? How do they find you? Instagram, your website, phone number, whatever you guys want to give us.
Yeah. Thank you. Yeah. So our site is buildingafinancialfuture.org. And Andy and I regularly put up blog posts. We work in the site to kind of explain concepts. Our contact information is on there. We've recently explored the world of social media, and it has not scared us yet, but it's getting there. And we are on Instagram, so we're at BA Financial Future. So you can follow us there. We respond to messages. We have some great interns that help us with content on there. So we are always looking to collaborate. We love working with other groups. For us, like we don't charge a fee for our service. We really believe in just like sharing information, and there's no charge on that. So that's our model, and we are happy to work with anyone who has questions. We don't give, our model is that, we're just here to provide information that's already out there. We're just going to break it down in a little bit of a simpler way. So we're not here to provide any kind of like investment advice. We've gotten a few emails recently asking if we lend loans. We don't lend loans. We're not a bank. I just want to put that out there, but we are very happy to walk you through any kind of processes, and love collaborating with people. But yeah, I would say Instagram and our website are probably the best ways to follow us. Our email is bafinancialfuture@gmail.com. We're very happy to help, and we feel very lucky to have been connected with you guys. We love your podcast. We love what you guys are doing. I think learning everything that you guys have gone through anecdotally it does more for people, like, to know that they're not alone in a lot of these things. And we really appreciate working with you guys, and we hope we can collaborate more in the future.
Yeah, well, thank you. We appreciate having you along for the ride, and I'm super glad that we've been able to connect through social media. I love social media. It does cool things. You are in Chicago right now, and we're sitting here having a conversation, so it's really cool.
Yeah.
Oh, nice. Awesome. Where are you guys located?
Oh, we're in Northern California, so we're about an hour north of San Francisco in wine country. Nice. Yeah, which awesome. Definitely aided in our financial mistakes. So yeah, sometimes it can be pricey to live here, For sure.
Yeah, you have those wine subscriptions over there. I get it.
We did. We had one. We had one from down south that.
We still do.
No, because they're no longer
No, but
in production.
Tobin James.
Well, okay, yeah. So we do still.
I don't blame you. If I
still
was
have one.
Sally, I would too.
Yeah, but we got our last shipment like right at the start of quarantine, and it went pretty fast, and we were like, okay, we gotta slow down.
Yeah.
Definitely. Well, thank you so much for joining us today, Jamie. We're gonna go ahead and put all the links in our show notes so our listeners will be able to reach out to you. Thank you so much for being comfortable sharing information with us, and for you and Andy being comfortable sharing information with others, and for helping people build a better financial future. That's just awesome. We can't tell you how much we appreciate it.
All right. You guys have a good rest of your day.
You too.
Thank you. Bye.
That was great getting to talk to Jamie. I was so impressed with what she had to share and her support for people going through the lending process and making sure that they're protected and safe. And I can't wait to sit down with her and Andy to chat again.
Mm-hmm.
So, listeners, if you guys stuck around through this interview, props to you. You get to be the first to hear that we're going to be doing a 2,000 follower giveaway on Instagram. So, head over to our Instagram. Make sure you check out our post. There's going to be some directions for you in there. You know what to do. Follow the directions. Engage, all that fun stuff. But we want to keep building this community of millennials and friends that are just trying to protect their finances and do better for themselves and their families. So go ahead over to our Instagram. Check out our 2,000 follower giveaway post.
Speaking of Instagram, while you're over there, make sure you head over to our bio on our page. If you're not following us, please go do that. It's at The Price of Avocado Toast on Instagram. In our bio, there's a link that takes you somewhere where you can put in suggestions for any topics or episode ideas, any questions that you have for Justin and I, and we go through those and really use those to help guide what we want to talk about, because this podcast is for us, yes, but it's really for you. We want to make it what you want to hear. So please go there and put all your suggestions there.
Absolutely. We want to touch on topics that other people are unsure about, and maybe we can lighten their load by doing some research and sharing what we came up with.
Mm-hmm.
So head on over to our Instagram, you guys, and let us know. That's going to be a wrap on this episode of The Price of Avocado Toast. As always, you guys, we're so glad that you stuck around to have this conversation with us, and we're so proud to be a part of this community with you. Happy budgeting.
You've got this, Toasties. Thank you for listening to The Price of Avocado Toast. If you vibed with this episode, share it with a friend. We'd love to continue building our listening community.
If you're interested in speaking more with a financial coach, hit up our coach Ryan at MeFinanciallyFree on Instagram. Use the promo code HELP50 in the consultation notes section to receive 50% off.